No surprises from Finance Minister Nirmala Sitharaman as the government opts for prudence over populism in the interim budget. No changes to income tax rates and capital gains tax. Pegs nominal GDP growth for FY25 at 10.5%. Finance Minister sticks to the path of fiscal consolidation and springs a pleasant surprise, projects a fiscal deficit target of 5.1% of GDP for FY25, expects to end this financial year with a deficit of 5.8%. The government banks on lower borrowing and higher revenue mobilization to keep the deficit in check, proposes to borrow just over 14 lakh crore rupees from the market, which is at 8% lower than last year's estimate. Also pegs gross tax revenue growth at over 11% in FY25. The government's infrastructure push continues. The capital expenditure outlay is hiked by 11% to more than 11 lakh crore rupees. Finance Minister promises to build 3 major rail corridors. 40,000 rail bogies will be upgraded to Vande Bharat standards. Stock markets gave up early gains to end marginally in the red. The rupee gained strength and bond markets cheer the budget after the government scaled down its borrowing plan. The government sets another big 50,000 crore rupee divestment target for FY25 after a tepid show so far in FY24. Even the revised target, 30,000 crores for FY24, is well above market estimates of near 20,000 crore rupees. A sharp 13% cut in fertilizer subsidies helps trim the overall subsidy bill. The outlay for food subsidies also 3% lower at just under 2 lakh crore rupees. No capital infusion for oil marketing companies this fiscal. The government halves the 30,000 crore rupee funding plan and defers it to FY25. The government overshoots the FY24 budget for the Rural Employment Guarantee Scheme by 43%, maintains the revised 86,000 crore rupee number as the outlay for FY25. Finance Minister proposes to set up a research and innovation fund with a corpus of 1 lakh crore rupees, promises long-term financing at low to nil interest rates for a tenure of 50 years. Tax revenue from online gaming has multiplied 6-fold, says Union Revenue Secretary Sanjay Malhotra, says all online gaming companies will have to pay 28% GST going forward. Well, those are the big headlines from the interim budget today. You're watching CNBC-TV18 and I'm Ritu Singh. Here are the other headlines this evening. Shares of Paytm plunged 20% after the RBI crackdown. Brokerages believe the new restrictions will end all operations of Paytm Payment Bank for all practical purposes. This, even as Paytm claims the annual EBITDA hit will be 300 to 500 crore rupees. Investors in embattled edtech company Byju's call for an extraordinary general meeting on the 23rd of February, seeking a change in leadership and reconstitution of the board. Sources say multiple investors are signatories to the EGM notice. Viacom 18 is in advanced stages of talks to buy a majority stake in Disney India, according to a Wall Street Journal report. The deal likely values Disney's India business at around $3.9 billion. The European Union approves a support package for Ukraine worth 50 billion euros. Hungary's President Viktor Orbán, who had earlier opposed the package, has now waved the green flag. Outgoing Jharkhand Chief Minister Hemant Soren today sent to a one-day police custody over an alleged land scam case. Congress and JMM legislators meet the governor in a show of strength, but the governor is yet to approve Champai Soren taking over as the new chief minister. And 7-time world champion Lewis Hamilton may swap silver for red. Reports suggest that the 39-year-old may race for Ferrari in 2025. It is likely to be a one-year deal with an option for a second season. He will replace Ferrari's Carlos Sainz.
Honourable Speaker, I present the Interim Budget for 24-25. We need to focus on 4 major costs: They are Garib, Mahilayeं, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The revised estimate of the fiscal deficit is 5.8% of GDP. The outlay for the next year is being increased by 11.1% to 11,11,111 crore rupees. Our government will launch a scheme to help deserving sections of the middle class to buy or build their own houses. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan and Jai Anusandhan.
भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे.
At 57 minutes, this was the shortest budget speech by Finance Minister Nirmala Sitharaman. Now, there were no surprises as the government opted for prudence over populism. No changes were made to the income tax rates and capital gains tax, and the nominal GDP growth for FY25 has been pegged at 10.5%. The government has stuck to the path of fiscal consolidation and has projected a fiscal deficit target of 5.1% of the GDP for FY25. However, the government expects to end this financial year with a deficit of 5.8%. Now, the government is banking on lower borrowing and higher revenue mobilization to keep the deficit in check. The finance minister proposed to borrow just over 14 lakh crore rupees from the market, which is about 8% lower than last year's estimate. The minister also pegged the gross tax revenue growth at a little over 11% in FY25.
The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate, notwithstanding moderation in the nominal growth estimates. We continue on the path of fiscal consolidation, as announced in my budget speech of 2021-22, to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path.
इस बजट में फिस्कल डेफिसिट को नियंत्रण में रखते हुए कैपिटल एक्सपेंडिचर को 11,11,111 करोड़ रुपए की ऐतिहासिक ऊंचाई दी गई है. अर्थशास्त्रियों की भाषा में कहें तो एक प्रकार से स्वीट स्पॉट है. इससे भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे.
I think it's a remarkable budget, very progressive, very forward-looking, full of hope to meet the aspirations of young India, new India, and a very comprehensive budget touching upon different sectors of society, touching upon a better future for the poor, opportunities for our youth, women-led development, and increased incomes of the farmers. So every segment of society have been addressed in this budget, interim budget. Madam Sitharaman ji spoke about transforming India through reforms and through very aggressive performance to make sure that the fruits of development reach the last man at the bottom of the corridor. We see inclusive and sustainable development.
Now, even as India is looking at not just self-sufficiency but also export competitiveness in several domains, is there any policy measure or any larger government plan for duty rationalization across several segments as India wants to become more globally competitive? We are also negotiating several bilateral investment treaties and FTAs.
Well, if you will note that this has been a very dynamic government. It's always been proactive in its approach. It's always been ahead of the curve to meet the challenges of the day. In fact, only yesterday we were seeing vaccine wars. And it shows that this is a Prime Minister who has always seen and been ahead of his peers. Clearly, even in the deft handling of the economy, we have seen a similar trend. He has focused largely on strong macroeconomic fundamentals. He has focused on providing opportunities for the youth.
Absolutely. Over the last 10 years, you would have seen our Prime Minister Shri Narendra Modi ji has put very clear focus on increasing capacity in railways, making sure that the safety is given topmost priority, and on bringing new technologies like Vande Bharat, like Amrit Bharat. So all this today has reached a level where we can take the railway system to the next level. In last 10 years, we have added 26,000 kilometers to the railway network. Last year itself, it was 5,200 kilometers, which is like adding one Switzerland to railways. This year again, we are adding 5,500 kilometers, which is like adding one more Switzerland to railways. So in today's budget, two major announcements have happened. First is 3 corridors, and second is upgrading 40,000 coaches. These 3 corridors are very, very important for railways. In these 3 corridor programs, we will be adding about 40,000 kilometers of new tracks. That is like adding the entire network of Germany into Indian railway network in the next 6 to 8 years. Together, these 3 corridor programs will create enough capacity for us to increase the passenger transportation from current level of 700 crore a year to 1,000 crore, and cargo transportation from 1,500 crore to 1,500 million tons to 3,000 million tons by 2030.
On the telecom receipt side, there's a sizable number that's coming in on that front as well. Your take on the growth of the sector as well as the upcoming auctions and what the roadmap will be.
Data consumption has increased from about 14 GB per month to about 19 GB per month, and the spread of data connectivity has significantly increased with the 5G, more than 400,000 towers in the entire country. I mean, that's phenomenal. That's more than maybe 2 continents combined. It's more than that. Second largest 5G ecosystem in the world. So it was quite natural that telecom revenue will increase with this spread of the services and the deepening of the reach of telecom services throughout the country. So it was quite expected. It is moving in that line.
As usual, a lot of rhetorical language, very little concrete on implementation. Some serious questions about areas of omission. No reference to the success or failure of the PLI scheme, which is taking so much money. She talked about foreign investment without acknowledging that investment has come down significantly. She talked, frankly, about a number of things that are couched in vague language like for confidence and hope and so on. I must say that this is going to be a very, very disappointing speech in terms of being couched entirely in generalities and without enough substance, nor any willingness to address the specific problems of the economy.
The FM spoke about GDP, but she did not speak about the per capita income. She spoke about free grain to 80 crore persons, but she did not speak about India's rank in the global hunger index, or to widespread malnutrition among children, leading to a high proportion of stunting and wasting. She barely referred to inflation, but she did not refer to the fact that food inflation currently is 7.7%, that real wages for casual workers have stagnated for 4 years, and the fact that there is an increase in the proportion of workers dependent on agriculture.
Okay, let's now hear from the budget makers. Now, they say it is incorrect to say the government is being conservative with the revenue estimates, and that's the word coming in from Finance Secretary TV Somanathan. Speaking exclusively to CNBC-TV18, he said the government is very close to achieving its revenue target. Take a look.
You said our estimates on collections, tax collections are realistic but slightly conservative. If you can highlight for us Why you believe that you've decided to err on the conservative side, and how much room does that give you then for an upward revision?
No, I think I was reacting to a discussion I heard which suggested that we were being extremely conservative.
That's the consensus view, by the way.
Which is absolutely incorrect. So I actually think we will be very close to our estimates in terms of what revenues we will get. And the reason for this is I think people are misreading the non-congruence between the gross tax revenue and the net revenue to the center. The non-congruence has a very specific and factual reason. Gross tax revenue, we have shown it growing at 12.5%.
Yeah.
This is the amalgam of all the taxes, including indirect taxes and including union excise duties. Among those taxes, many of them are growing. Some are growing at 14, some are growing substantially. But union excise duties, in our own estimates, I don't think anybody would contradict that, is likely to be down 5%.
Yeah.
So the item which is down 5% is a particular component which is not shareable with the states. So the entire 100% of the decline accrues to the center on that item. The increase on the other items is shareable with the states. Now similarly, each tax has a composition in terms of tax, cess, surcharge, which results in a different combination of how much is shareable with states. The net effect of that combination, particularly with union excise going down and being almost fully shareable, if you look at another part of the same statement, the states' share, the devolution to the states is increasing by 16.5% against a tax revenue increase of 12.5%. Now, if the deduction is increasing 16.5%, the top line is increasing 12.5%, then the net doesn't increase at 12.5%. It increases only at 10.8%. And that is being interpreted as some conservatism which is undue.
Okay, meanwhile, Revenue Secretary Sanjay Malhotra has said that the revenue from the online gaming sector has multiplied 6 times since the 1st of October. Now, in a conversation with Shireen Ban, he clarified that companies will have to pay 28% GST going forward.
Well, you know, unlike last year where there were a couple of points of controversy, including, of course, what we saw happen as far as gaming was concerned and TCS, this time around, nothing much to quibble about. But on both of those issues, and I know you clarified that there is no change as far as the TCS rate is concerned, it is basically legitimizing or just reaffirming the rate that was put out as far as the press release goes. But on gaming specifically, now the matter is sub judice, you know, where do things currently stand?
Let me first of all tell you, that the changes that were made for online gaming, of course this is not a budget issue, but since you have asked this, from 1st October, our revenues have multiplied to 6 times. 6 times. Over the 3 months, that revenues that we have got, they are averaging about 1,200 crore, vis-a-vis 200 crore per month revenues that we were getting.
And only from the online gaming platform?
Only from the online gaming platform. This does not include, the casinos, etc. So there was a huge potential which was there, which was untapped, and which we have been now able to tap. Insofar as the question as to whether, these changes were retrospective or prospective, of course, these changes were prospective. Retrospectively also, our belief was that the online games were liable to pay a 28% tax rate because these were actionable claims. Their claim is that these are not actionable claims, and so they are liable to pay 18% on what is called GGR. So that dispute is in the court. But going forward, there is no issue. All of them are paying 28%, and they are paying 28% on the actual value paid.
Okay, here's a question we always ask. Will the government's fiscal consolidation push spark an upgrade from rating agencies? Well, here's an interesting exchange between former Chief Economic Advisor to the government, K.B. Subramanian, and Moody's executive, Christian Guzman. Take a look.
Given the kind of fiscal transparent path, consolidation path that India has achieved, I think it'd be absolute travesty if the rating agencies do not account for it.
And I asked both the CEA as well as Mr. Somanathan that question, whether they expect an upgrade, and they said they don't expect anything from the rating agencies. As Mr. Somanathan spoke about double standards, and he said, we know that they're not fair, so we don't expect anything.
No, I think that is, I would say that is out of the frustration, sheer frustration at the double standards that are actually, and I think here, for the benefit of our viewers, I must highlight that, as we had shown, the 5th largest economy in the world has never ever been rated BBB. And when you look at rating, that is actually a reflection of the ability to repay and willingness to repay. India has never ever defaulted. So the willingness to repay is gold standard, and all our debt is domestic. So, and GDP is growing so well, so the ability to repay is there as well. So I don't know what the rating agencies actually, what model they use. It is flawed. As a financial economist, I can say with absolute conviction.
It's not my place to respond to that. All I can say is that most countries have in fact not defaulted. So lack of a default history is not really a marker of a high credit rating. I do believe that we have given credit for that for the fiscal deficit consolidation and the progress that has been made. So indeed, with the interim budget that was announced today, there is a 4th consecutive year of narrowing fiscal deficits as India has emerged from the pandemic. But I think let's not lose sight of where we started. Prior to the pandemic, the union budget deficits were actually well under 5%. So in the 5 years in the 5 years prior to the pandemic, that average was actually 3.8%. So we're looking at perhaps at a forward-looking basis, approaching 5%. We're still above where we were when we had India at Baa2. I think a couple of other things when we look at our fiscal assessment is the stock of debt. The stock of debt is also much higher than what we had seen when India was at Baa2. And I think the more important thing for us is debt affordability. And interest payments to revenue here again is in a much weaker state than it was prior to the pandemic.
Okay, we'll move away from the budget to other corporate news where shares of Paytm hit lower circuit in trade today. This after the RBI imposed major restrictions on Paytm's payment bank yesterday. Now, Paytm said that this is going to result in an annual EBITDA hit of 300 to 500 crore rupees. Its founder Vijay Shekhar Sharma called this action a big speed bump, but one that the bank will be able to navigate. And addressing this issue in an analyst call, he said that the Paytm Payment Bank is taking immediate steps to comply and that 197, the parent company, is already working with other banks since Paytm Payment Bank was barred from onboarding new customers back in 2022, and that he was overwhelmed with the support that he's received from other banks who they'll partner with. Now, when asked what exactly warranted this action from RBI, he simply said that there were no additional details sent to the company by the RBI separately, apart from what is publicly known. Now, brokerage is, of course, largely negative on the outlook for the company. Bernstein says RBI action is practically ending the bank's operations and adds that the already heavy regulation will get worse from here, the overhang of that. Macquarie believes that this will make it harder for Paytm to retain customers, and these lapses are quite material and significant, and RBI in effect has revoked the PPI license of Paytm. Jeffrey says the direct impact can be 20 to 30% of the EBITDA, and it has downgraded the stock to underperform with a target price of 500 rupees.
Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see through in next few days or quarters, as the case would be.
Now, investors in embattled edtech company Byju's have called for an extraordinary general meeting on the 23rd of February. Now, we've been given to understand that investors holding about 30% stake in Byju's are seeking a change in the management control of the company and a reconstitution of the board, citing persistent issues relating to corporate governance, mismanagement and compliance. Now, we understand from our sources, investors led by Prosus, General Atlantic, Peak 15, Safina, the Chan Zuckerberg Initiative, Owl and Sands have issued a notice to Byju's parent company Think and Learn, calling for an EGM to reconstitute the board of directors so that it is no longer controlled by the founders of Think and Learn, and a change in the leadership of the company. Now remember, after representatives of Prozis, Speak 15 Partners and the Chan Zuckerberg Initiative resigned from the board of Byju's because of differences with the founder in June last year, only 3 board members remain, and that is the founder Baiju Ravindran, the co-founder and his wife Divya Gokulnath, and his brother Riju Ravindran. Now, the investors said that this request for an EGM follows earlier notices of requisition which were sent to the board of directors in July and December last year that were disregarded. The investors also said that the EGM notice follows many months of continued efforts by shareholders to engage with the company to address these issues around the corporate governance, mismanagement, and all of these efforts have been ongoing. Now, Prozis, Speak 15, these other investors said that while they were grateful for the efforts of the Independent Advisory Council that we know is Rajneesh Kumar and Mohandas Pai in addressing some of the looming challenges, they were deeply concerned about the stability of the company under the current leadership and with the current constitution of the board, and are hence seeking their removal. Now moving on, Viacom18 is in advanced stages of talks to buy a majority stake in Disney India. Now this according to a Wall Street Journal report. That report also says that the deal likely values Disney's India business at around $3.9 billion. Nisha Padar has been tracking that story for us and joins in with what she's picking up. Nisha.
Well, that's right. It's a large transaction that is brewing in the media and entertainment space, and reports do suggest that Viacom18 is likely to buy a majority stake in the India operations of Disney. Now remember that the valuation, as reported, has taken a dip for Disney India, is what reports have been suggesting, to $3.9 billion. Earlier estimation was much higher than this. A few of the factors has really impacted the valuation for these businesses, especially losing the mainstay IPL rights, and that has also lost a lot of subscribers for Disney's India business. And on the other hand, Zee being incapacitated to pay up for the TV rights for the men's cricket that it had earlier agreed to buy from Disney because of the Sony merger falling through. So all these, along with the fierce competition that is being posed in this particular segment, well, Disney India's valuations are likely to be much lower than earlier anticipated. As part of the deal structure, a report suggests that Disney is likely to own about 40% in its India business, and majority stake would be sold off and merged into Viacom18 and Bodhi Tree joint venture, in which Viacom18 is likely to have the majority stake and could be paying about $1.5 billion of cash as part of this deal structure.
Nisha, thanks very much for joining us with that story. On that note, we're going to wrap up this edition of India Business Hour. Thank you for watching, but stay with us. The news continues right here on CNBC-TV18.